I think the key is maintaining expectations and knowing that we're coming off, 8 or 9 years of just unbelievable growth in the apartment sector, rent growth, job growth, and knowing that trees just can't grow to the sky. So I think that maintaining expectations, underwriting in a fairly realistic and disciplined way, and knowing that you can't buy every deal because you got to maintain some sort of discipline, I think is what's going to make for us to be very successful in 19.
One of the most interesting that has developed in the marketplace as we're working with a lot of our clients in market selection and asset selection is the intrinsic value that is resurfacing regarding core investments. If you look at the risk-adjusted core investments of the assets that are being marketed currently and have been on the market for a while, there is a pretty compelling case for buying some of those core assets, mainly because of two factors. One, the outlook for the economy is still pretty strong for 2019, and the fact that the pullback in construction starts is really going to bring the production numbers on new units down significantly in 2020 and 2021. So we may not see the pullback in construction as much in 2019 as we will in 2020 and 2021.
The key to competing successfully in the apartment sector is just understanding how to underwrite your decisions and being very conservative, but also being realistic. And I think this is the time when people who really understand what they're doing are going to succeed the best.
So it depends on if that question is for developers or architects, but I think in both cases, construction costs are going to be the largest challenge. And the key to competing successfully is definitely based on how you're going to overcome the construction cost issue. Efficiency in design is absolutely the number one component, either on the architect side and for developers as you're making decisions about what product type you're going to choose. Arguably, the Humphreys & Partners designs are the most efficient, which means from a construction cost perspective, the cost of lumber continues to increase, and the more efficient you are, the less you need to rely on that cost.
So in 2019, I think one of the changes is going to be relationships. Inland being around 50 years and having the relationships we have, we've done probably 60% of our deals off market, and I think that's going to be the key, is being around during the good and the bad times. People know who you are, know that you can close, know that you can perform, and that's where I think you're going to get your advantage going into 2019 is having those relationships and being able to work with people that you've dealt with before, and they know you're a closer, they know you're going to be there with the money, and they know they're not going to have to deal with retrades or bad deals at the end of the day.
I think a little bit of evolution in the marketplace is occurring. There's a little bit more uncertainty, certainly on the operations side. I think people are playing some defense, holding on to existing residents and looking for any way to cut costs.
In terms of competing, there's always going to be an opportunity to acquire, but acquiring properties and upgrading them or repositioning them just requires a very sharp pencil. Because we're 9 years into this expansion, a lot of deals have been looked over. So refining your assumptions, tightening up your business plan, very much focusing on who's your customers and how to serve them best seems to be where we're at. Again, demand is in pretty good shape, and I see the opportunity in the 60-70% of the housing stock among reasonably well-employed folks, people who are earning $50,000 to $80,000 a year, are actually doing quite well, and yet that's where the opportunity is, I think, for multifamily.
So to compete successfully, we think for 2019, we're going to have to continue to focus on relationships and be able to offer those relationships a wide array of products.
I think the keys to competing successfully are interesting. I think there's a sophistication coming in with the opportunity zones. People do understand the fact that that is opening up a whole new chapter in the way some of these deals are going to get done. The money being raised is actually hitting the market pretty good. there's several meetings that we've had here where the whole focus has been on the opportunity zone. With that said, the economic fundamentals are still really strong, and I think you'll see more structure this year dealing with the interest rates, people looking to get the return. We may see a little push up the leverage scale, but that all just makes the deals a little more interesting to get done, which that's where you need the expertise of the people that are at this conference.
So for us at Northmark, we feel it's covering all aspects of the market. So we want to make sure we have money all through the capital stack, because we see one size does not fit all. For us, finding extended bridge money, stretched seniors, mezzanine, equity, all of that is in the picture for 2019 to try to make it work.